What is happening, crypto fans? Welcome back to Bitcoin Bulletin, where we bring you the pulse of the market in real time. The digital asset space is absolutely electric right now, a whirlwind of activity that you simply cannot afford to miss. We've got seismic shifts, bold strategies, and market movements that are defying expectations. Get ready, because the news cycle is moving at lightning speed, and you're about to get the inside scoop on the updates that matter most. You don't want to be caught sleeping on this. Let's dive in. First up, the ultimate showdown. Bitcoin bulls are charging, aiming for that incredible $112,000 mark, and guess what? Gold is right there with it, smashing its own all-time highs. This is more than just numbers, it's a signal of massive market dynamics at play. But is this rally sustainable, or are we looking at a potential dip back to $100,000? We've got the expert takes on the critical technicals and historical patterns that could shape Bitcoin's immediate future. Next, we're heading over to Japan, where a major player, Metaplanet, just got the green light from shareholders to issue a staggering amount of preferred shares, aiming to raise billions for more Bitcoin acquisitions. They're already sitting on 20,000 BTC, but their ambition doesn't stop there. They're targeting 100,000 by 2026. But it's not all smooth sailing. Their share price has taken a hit, and they're scrambling for liquidity. We'll break down the risks and rewards of this aggressive strategy. Then, we're putting two titans under the microscope, MicroStrategy and Metaplanet. These companies are not just buying Bitcoin, they're fundamentally rewriting the playbook on corporate finance. MSTR just added another $450 million in BTC, pushing their holdings sky high, while Metaplanet is aggressively expanding its own reserves. We'll explore how they're using equity and preferred shares to fuel their Bitcoin ambitions, and what this means for institutional adoption and the very definition of corporate assets. And finally, what's fueling this September comeback hope for Bitcoin? We're talking institutional buys, massive ETF inflows, and crucially, the Federal Reserve's next move. With strong bets on a rate cut, the market sentiment is shifting. We'll analyze the technical indicators, the support and resistance levels to watch, and what this rally could mean for the broader altcoin market. Is alt season over, or is Bitcoin poised to dominate? Stick around, you won't want to miss a single second. Make sure you're subscribed, hit that notification bell, and let us know your thoughts in the comments below. Gold rush meets Bitcoin surge. The price of Bitcoin is surging, mirroring gold's impressive climb to new all-time highs, igniting excitement among bulls aiming for the $112,000 mark. This synchronized movement between the traditional safe haven asset and the digital gold has captured the market's attention, raising questions about the underlying economic forces driving both assets. However, amidst the optimism, some market watchers are urging caution, pointing out that Bitcoin's price action has yet to definitively signal a reversal, and the possibility of a dip back to the $100,000 level remains a tangible risk. Adding another layer of complexity, historical data suggests that the third week of September is often a period of losses for Bitcoin, a seasonal pattern that could test the resolve of current bullish sentiment. Bitcoin's recent surge saw it climb toward $111,775 on Tuesday, coinciding with gold breaking above $3,500 per ounce. This upward momentum was fueled by a breakout that began after the release of key U.S. macroeconomic data on Friday, indicating a strong risk-on appetite among investors. The bullish push appears to have caught short sellers off guard, with data from CoinGlass revealing approximately $60 million in short liquidations across the cryptocurrency market within a 4-hour window. This suggests a significant capitulation event for bearish positions, further propelling the price upwards. Despite the impressive price action, many in the crypto community are adopting a wait-and-see approach. Analysts like Keith Allen, co-founder of Material Indicators, are closely monitoring key technical levels, particularly the 21-day Simple Moving Average, SMA. He highlighted that strong technical resistance is forming where the 100-day SMA converges with a crucial trend line, suggesting a significant hurdle for further upside. Similarly, crypto expert Marcus Corvinus described the current situation as a critical moment for Bitcoin's strength, noting that the price is currently positioned at the bottom of its established uptrend channel. He emphasized that the outcome of the next daily candles will be pivotal in determining whether a sustained reversal can occur. However, not all commentators are convinced that a reversal is imminent. Popular trader Roman expressed skepticism, stating that there are no immediate signs of a reversal and that the market has lost the $112,000 support level, which is now expected to act as resistance. He further warned that there's no compelling reason to believe Bitcoin won't retest the $100,000 support level in the coming days, echoing his earlier concerns that a break below this crucial psychological barrier could signal the end of the current bull market. Adding to the cautious outlook is the historical tendency for Bitcoin to underperform in September, particularly during the third week. Network economist Timothy Peterson pointed out that September has consistently been a challenging month for BTC/USD, with average losses of 3.5% since 2013. He cautioned that this average can be deceiving due to the high volatility experienced during the month. This historical seasonality, combined with the technical resistance levels and the ongoing debate about a potential reversal, paints a complex picture for Bitcoin's short-term trajectory. Market participants are keenly observing whether Bitcoin can overcome these technical and seasonal headwinds, or if the recent surge is merely a prelude to a deeper correction. The interplay between institutional demand, macroeconomic factors, and historical patterns will be crucial in determining the path forward for the world's leading cryptocurrency. This confluence of gold's historic rally and Bitcoin's ambitious climb presents a fascinating market narrative. But as Bitcoin navigates these critical levels, we turn our attention to Japan, where a company is making massive moves to secure more digital gold. Japanese giant bets big on Bitcoin's future. In a move that underscores the growing acceptance of Bitcoin as a corporate treasury asset, Japanese firm Metaplanet has secured crucial shareholder approval to issue a staggering 555 million preferred shares. This strategic maneuver is designed to raise an immense $555 billion, approximately $3.7 billion, specifically earmarked for further Bitcoin acquisitions. This ambitious fundraising effort comes as Metaplanet already holds a significant 20,000 BTC in its treasury, positioning it as a major player in the corporate Bitcoin landscape. The company's recent acquisition of 1,009 BTC on Monday, for which it paid 16.479 billion yen, $112 million, at an average price of $102,607 per Bitcoin, highlights its ongoing commitment. This acquisition now brings their total holdings to 20,000 BTC, representing a substantial investment. Notably, the average purchase price is currently showing a 6.75% profit relative to Bitcoin's prevailing market price, indicating a successful deployment of capital so far. However, Metaplanet's aggressive strategy is not without its challenges. The company's share price has experienced a significant decline, dropping by 54% since mid-June. This downturn poses a direct threat to its capital-raising model, particularly impacting agreements with investors like Evo Fund. Lower stock prices make it less attractive for such entities to exercise their warrants, which are a key component of Metaplanet's funding strategy. Consequently, the company has been forced to temporarily halt Evo Fund's warrant exercises from September 3 to September 30, while it actively explores alternative funding mechanisms to navigate these liquidity concerns. To shore up its financial position and continue its expansion plans, Metaplanet also announced earlier in the week its intention to raise approximately $130.3 billion, $880 million, through a public share offering in overseas markets. This move is crucial for maintaining operational flexibility and ensuring the continued accumulation of Bitcoin. The company's leadership has consistently emphasized its long-term vision, setting ambitious targets to increase its Bitcoin holdings substantially. The stated goals are to reach 100,000 BTC by the end of 2026 and an even more astounding 210,000 BTC by 2027. Metaplanet's growing Bitcoin treasury has been supported in part by a partnership with investment firm Evo Fund. Through this collaboration, Evo Fund has acquired significant stakes in Metaplanet, providing capital that has been used to redeem existing bonds and fuel further Bitcoin purchases. This symbiotic relationship showcases how strategic partnerships can underpin aggressive accumulation strategies in the crypto space. Despite the firm's determined expansion, market analysts are closely watching the inherent risks associated with such Bitcoin treasury strategies. The primary concern revolves around the volatility of Bitcoin prices. A sustained downturn in Bitcoin's value could significantly erode the premiums on companies' stocks, thereby jeopardizing their funding capabilities and the viability of their acquisition models. Several companies have already encountered difficulties in maintaining their Bitcoin accumulation strategies as market conditions have shifted. Metaplanet's ability to successfully adapt its capital structure and navigate market fluctuations will serve as a critical indicator for the broader feasibility of corporate Bitcoin treasury strategies in the evolving financial landscape. The bold ambition of Metaplanet highlights a significant trend in the corporate world's embrace of digital assets. But as Metaplanet navigates its ambitious path, we look at how other giants are also redefining corporate finance with their Bitcoin strategies. Corporate finance meets crypto. MSTR and Metaplanet lead the charge. In a fascinating convergence of traditional corporate finance and the burgeoning digital asset world, two major players, MicroStrategy, MSTR, and Metaplanet, are quietly but powerfully rewriting the rules of how companies manage their treasuries. Both firms are aggressively accumulating Bitcoin, utilizing innovative financing methods that signal a growing institutional embrace of cryptocurrencies as strategic reserves, even amidst market volatility. MicroStrategy, under the leadership of Michael Saylor, continues its relentless pursuit of Bitcoin, recently adding another 4,048 BTC to its already colossal holdings. This latest acquisition, costing approximately $450 million at an average price of $110,981 per coin, brings MSTR's total Bitcoin reserves to an astonishing 636,505 BTC, valued at nearly $70 billion based on current market prices. The company primarily funded this purchase through the issuance of common stock, supplemented by preferred shares. However, this strategy has raised eyebrows among investors, as the issuance of common stock has led to a decrease in MSTR's market net asset value, MNAV, to around 1.5x, down from a previous target of 2.5x. This dilution concern is a significant point of discussion among shareholders, balancing the company's commitment to Bitcoin accumulation against potential impacts on shareholder value. This latest buy follows a pattern of aggressive accumulation seen throughout the summer. In August alone, MSTR acquired over 7,700 BTC, although this pace is slower compared to July's massive purchases of over 31,000 BTC. The decision to continue buying even with a lower MNAV suggests a calculated strategy to balance Bitcoin acquisition with the need for financial flexibility, moving away from convertible debt financing earlier in the year. Meanwhile, Metaplanet, the Japanese firm that famously pivoted from a hotel operator to a Bitcoin treasury, is making equally significant strides. The company recently purchased 1,009 BTC for $112 million, boosting its total holdings to 20,000 BTC. This positions Metaplanet as one of the largest publicly traded corporate Bitcoin holders globally, even surpassing established players like Riot Platforms. The acquisition was executed at an average cost of $102,700 per coin, bringing the company's total investment in Bitcoin to over $2 billion. Metaplanet's aggressive accumulation is a key component of its overarching strategy to quintuple its Bitcoin reserves to 100,000 BTC by the end of 2026. To fuel this ambitious growth, Metaplanet has also been actively securing additional funding. Shareholders recently approved a plan that could allow the company to raise up to $555 billion, $3.8 billion, through the issuance of preferred shares. This follows an earlier announcement of an underwritten offering aimed at raising $130,884 million in overseas markets. These funding initiatives are crucial for stabilizing the company's stock price, which has seen a considerable decline of nearly 55% since its peak in June. To date, Metaplanet has already raised over $242 billion through a moving strike warrant agreement with the investment firm Evo Fund. The collective actions of MSTR and Metaplanet underscore a significant trend: the increasing role of Bitcoin in corporate finance. With MSTR's holdings now exceeding 3% of Bitcoin's total supply and Metaplanet solidifying its position as a major Asian institutional holder, these companies are demonstrating a clear strategic intent. They are leveraging a diverse array of financial tools, common stock issuance, preferred shares, and underwritten offerings, to continue their Bitcoin accumulation strategies, even in what could be considered a bearish market environment. These developments are not just about acquiring an asset. They represent a fundamental redefinition of how corporations view and integrate digital assets into their long-term financial strategies, viewing Bitcoin as a potential strategic reserve. These corporate titans are not just holding Bitcoin, they're actively shaping its future in the financial world. But as these companies forge ahead, how is the broader market reacting, and what's fueling Bitcoin's recent comeback hopes amidst macroeconomic shifts? Bitcoin's September rally: Fed bets, ETF inflows, and institutional power. Bitcoin has staged a remarkable comeback above the $109,000 mark this September, defying typical seasonal weakness thanks to a powerful combination of strong institutional demand and escalating bets on a Federal Reserve interest rate cut. This resurgence is a testament to the growing influence of both corporate buyers and exchange-traded funds, ETFs, in stabilizing and driving the price of the world's leading cryptocurrency. The recent price correction, which saw Bitcoin dip by nearly 5% in the preceding week, was largely attributed to the hotter-than-expected U.S. personal consumption expenditures, PCE price index report for July. However, market sentiment quickly shifted as traders increased their expectations for a Federal Reserve rate cut. The CME FedWatch tool indicated an 87.6% probability of a 25 basis point rate cut at the September meeting, a figure that rose from 85% prior to the PCE data release. Such a move by the Fed could significantly weaken the U.S. dollar and foster a risk-on environment, which typically benefits assets like Bitcoin. This potential monetary policy shift is crucial, especially considering Bitcoin's historical performance in September. Historically, the month has often seen negative returns for BTC, with an average loss of 3.5% since 2013. However, if the Fed does implement a rate cut, coupled with sustained inflows into Bitcoin ETFs and continued corporate demand, traders might witness a positive September this year, breaking the established pattern. Institutional demand has been a cornerstone of this recovery. Metaplanet's recent acquisition of 1009 BTC is a clear indicator of this sustained interest. Furthermore, U.S. spot Bitcoin ETFs experienced a significant turnaround, recording over $440 million in weekly inflows, a stark contrast to the $1.17 billion outflow seen in the previous week. If these positive inflow trends persist, they could provide substantial support for Bitcoin's price and fuel a more robust recovery. From a technical perspective, Bitcoin's price action presents a mixed but potentially optimistic picture. After facing rejection from a previously broken ascending trendline on August 23, BTC saw a decline but has since begun to recover. Key support levels are identified around $105,573, with significant resistance expected near $116,000. The Daily Relative Strength Index, RSI, currently sits at 41, indicating bearish momentum, but a bullish RSI divergence on the 4-hour chart suggests a potential short-term trend reversal or rally. If Bitcoin can consolidate above the 50-day exponential moving average, EMA, on the 4-hour chart at $110,650, further gains toward the $117,429 level could be possible. However, the broader market landscape, particularly the altcoin sector, remains a point of concern. Analyst Benjamin Cohen predicts that Bitcoin's dominance could see a significant rebound. If Bitcoin successfully bounces off the 20-week simple moving average, SMA, its dominance is expected to increase, potentially signaling the end of alt season and leading to a decline in altcoin prices. Conversely, if Bitcoin falls below the 20-week SMA and tests the 50-week SMA, altcoins could face an even sharper correction. In either scenario, an increase in Bitcoin's dominance appears likely, which could delay the anticipated alt season. The interplay between Fed policy, institutional investment, and Bitcoin's technicals will be critical in determining the short-term trajectory for both Bitcoin and the broader cryptocurrency market. This surge highlights Bitcoin's resilience and its growing importance in the global financial narrative. And that wraps up our deep dive into today's biggest stories. Let's hit you with a quick recap. And that wraps up our deep dive into today's biggest stories. Let's hit you with a quick recap. Bitcoin bulls are charging towards $112K as gold hits new all-time highs, but watch out for that $100K support. Metaplanet is raising billions for more Bitcoin, aiming for 100K BTC by 2026, despite share price challenges. MSTR and Metaplanet are rewriting corporate finance with massive Bitcoin buys, signaling growing institutional adoption. And finally, Fed rate cut hopes and strong ETF inflows are fueling Bitcoin's September comeback, though alt season might be on thin ice. Don't miss out on any of these crucial updates. Make sure you're subscribed to Bitcoin Bulletin, hit that notification bell so you never miss an episode, leave us a comment with your thoughts, and follow us on all our social channels for more real-time insights. We'll see you in the next one.